Good morning, everybody, and welcome to the Morning Volatility Report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to Fed. Well, I guess that can only be described as Fed Wednesday. It is the special day every month where the Open Market Committee, Fed Open Market Committee, confuses and confuses the marketplace with, I guess, whatever they're going to do. Maybe they won't. Who knows? Anyway, weekly option trading course, timely, on the 27th. Click here to optionpit.com/events to sign up. So again, anytime you take our class, you can put that against any sort of full value products like Option Pit Gold or Option Pit Live if you buy it for a year, okay? Or a couple of months of Option Pit Live. All right? And with that, so what we have is we've got VIX basically outpacing the drop in the S&P 500. We've had a pretty sharp couple of days in VIX. If I can get my... There we go. So we got I think the Friday or actually even the Monday markdown in here. Let's go look at our tick chart. Right. We got a pretty solid Monday markdown to 1130, right? This is giving you an idea of, where VIX can go. So we got some sort of markup on a settlement for today as well. We'll get the special opening quotation for VIX. I haven't got it back yet. I'm actually let me see. But we'll see that. We'll get it shortly here. But what do we have? Well, what was happening is the market wasn't caring about whatever the Fed was doing, and then all of a sudden they care. That's the simple way, the simplest way I can describe this. What you do see is where vol can go if we have the status quo. So you get kind of an idea of where that's trading. However, if we don't have the status quo, okay, we could, we have run so far so fast lately that, maybe a 1 to 2% drop on a panic is certainly possible, pushing VIX maybe to 16 or 17 temporarily. I think it's kind of an if-then scenario, mostly just because we have run and run and run, and markets run on continuation of same. And if there isn't continuation of same, we could have some troubles. So as far as what we have looked at basically strangle type trades, anything that owns some juice in, in let's say October, and we're not super heavy with vol product positions right now, but what we could see is we're now moving, what I usually euphemistically, we're kind of moving to the top of zone 1 when we were almost near the bottom. So we've had a pretty good move. So now all of a sudden it does bring a little bit of a drop back into play. So there is a little bit of a vol drop scenario after this Fed report, or the market falls apart. It's kind of, I think it's one of the two. So we have some pairs that we can do there. We'll look at them today. We really haven't added any real pairs, so because we weren't sure what vol was going to do. In previous run-ups to the Fed, remember the vol was kind of bid, and then the day or two before they kind of pre-sold it. We have a little bit of the opposite this time, where they really sold vol down hard into Monday, and then realizing maybe 11% vol is just a little too cheap for what could happen. And realistically, same going to the upside as well. You could see, right, we could easily see stocks ramp back up to 220, which is, and all of a sudden we've got a 1% move, something like that, or something along those lines. You got a pretty a pretty high, the upside now that we pulled back a little bit, we have a little bit more. So the market is just basically pricing more of a swing, even though realized vol recently has been very low, right? The swing seems to be more of a one-day event. And we'll see, again, after today, I'd expect stocks mostly to trade weaker. I expect vol to continue the bid. You could even see 14 for VIX. Right now, the futures are keeping pace to some degree. You're seeing, again, the really shorter-term futures are moving up sharply. Again, keeping their delta for the most part. The SEP future, again, keeping it around a 50 delta. So you're getting a little bit of movement, but not tons, right? And again, we don't expect to see tons unless we have a pitch. All right. Other places of interest, we have looked at VRX. We talked about it a little bit. Now all of a sudden it's upgraded. I think this is a 1-month high at this level. Volatility is up a little higher. We'll take a look at that today. The story is still interesting in there. Also, I think at the same time, oil bouncing and looking at the oil majors as a play, as potential. We might get a little bit of action in the banks only because if they do raise, maybe the banks, or they start to say we're going to raise quicker, you might get a little more action in the banks so we can price some premium in there. And lastly, taking a look at the euro, FXE as a proxy for that, what do we get out of that if we actually get some kind of a move? That's the big question. If it can maintain the little rally we've had. Because it didn't look so good after Brexit, and I don't know what really has changed, but we'll see. All right, with that, but any kind of status quo still feels like SPX rallies to 220. If they get a lot more hawkish on rates, then I think you want to wait a little bit and see how that all just sort of plays out. All right, and with that, I will talk to you, a lot of you in our chat room today. All right, everybody, bye-bye. Also, we have a webinar tonight at 4:30, Trading the Weekly Options. Go to our website if you need to and sign up for it. There's also a replay of past weekly trading as well. All right, and with that, you have a great day. Bye-bye.